get in our guest editor at this point in time. Raamdeo Agrawal, the Joint Managing Director of Motilal Oswal Financial Services, has joined into the studio to be our guest editor for the day. So he'll be talking about all the stocks that he owns, all the stocks that he loves, and of course tell you what to do as a retail investor. Raamdeo, hi, good morning, and thank you for joining us on the show. I understand it's been 9 years that you've been Joint Managing Director at Motilal Oswal. Correct me if I'm wrong, but how different is this bull market that we're currently in compared to the ones that you've seen in the past?
Yeah, so I have seen 3 of them. Actually, 4 of them. One as a research analyst, 85 one, which was VP Singh, Rajiv Gandhi when they came in. And then we saw
the 94 when the FIIs came in.
Harshad Mehta bull market in 92. That actually brought the Motilal Oswal into some kind of entity. And 2000, which was Y2K, complete madness. I used to tell the Americans, we have already done it in 92. So that's what was 2000. And again, we saw a global credit boom in Lehman crisis in 2007. So that was kind of 4th one. And everything comes in a very different kind of backdrop. I mean, the story is very different. You might try to anticipate, but you cannot anticipate, let me tell you. I mean, only when the storm is gone, then you realize that, I mean, you can see your, I mean, I think of the 2 bull runs, you must have had CNBC coverage, 2000 and 2007.
Yes, we certainly were there during the ice stocks.
Yeah,
and,
so the kind of...
we were a fledgling during the ice stocks. We saw the 2003 to 2008 rally in full blood, as it were. But it's important that a veteran like you is saying that, you know, you only realize that this was the bull run and this was the peak and this was the cusp only after the storm is over. Nevertheless, it's your practice time. You know, several people tell us that we are on the start of a bull run. Does it feel like that since you have seen 4 of them?
Yes, more probably in the last 4-5 months you are feeling like that. I mean, the stocks are flying off like big time. I mean, 50%, 100% appreciation in 1 month or 2 months is common. And you can see buzz for mid cap and even smaller cap. People are, you know, earlier people didn't want to go into the smaller stocks. They wanted large stocks, and now actually the fancy is for the smaller stocks. So the risk appetite is increasing, which is what is a what do you call starting off a bull market, where people come out from the shell and start trading a lot more, start going into smaller stocks, riskier stocks, bad stocks. I think all those things are happening. So it's a classical bull market.
Okay, since we've put that premise on board, I understand that you're a big ardent follower of Warren Buffett. So, you know, one of his axioms is that investors win when markets fall. But this market has not yet fallen, so not given a big opportunity. I mean, if you look at the run in the last 6 months from 6,000 to 7,800, you know, there's not too much of a potential that investors have gotten to enter in. So do you feel that there is one correction that we could see before the end of the year?
Yeah. So I think let's start with what you said. Investors win, the markets fall. When the markets fall, I don't think that is what we believe. Investors win when the companies win.
Okay.
You know, you may see how much money an investor makes. An investor makes as much money as the company makes. And market creates that what you call expectation as much as the company is going to make money. Okay. So what is important is to focus on what the companies do rather than markets do, because we don't know what the markets are going to do. We can feel what the companies are going to do, whether how is the competitive situation, what is the competence of the management, how good is the business model. So I can have a fairly good, at least some predictability about based on the past about the company, but not about the market. So I would think that I would focus 0.01% on what the market does and 99.99% on what the companies do.
Okay, that's really fascinating. If you can just prove that point to us. You know, companies that clearly outperformed even from, say, 2008 to 2015, I mean 2014, the nearest memory, just to, you know, drive home the point that, you know, markets, even in bad markets, there will be winners, just to demonstrate the point.
So look at TCS, okay, now, or Sun Pharma, or these 2 sectors, I mean, just broadly since you asked them. I mean, these 2, TCS, I think, up about 3 times in the last 5 years, if not more. I don't have an exact number, but it has done some staggering number in last 5 years. It is the biggest wealth creator it has created about 2.5 lakh crores. It is, I think, more than that, about 3 lakh crores in last 5 years. And it is the market cap, largest market cap in India. And it is not a actually proxy onto the Indian economy. Yet it is owned and most of the operations are in India. So despite very flat to down market in last 5 years, market has gone from 21,000 peak in 2008. Today you are at say 24,000. So barely 20% it is up. But this stock is up 300%, 400%. So it is not because of the markets have done well. It is because the company's profits are exploded. Last year, company's profit went up by 50%. Stock went up by 60%. So, I mean, if you see for a company like TCS, I can tell you in last 11 years or 10 years, it got listed in 2003. In 11 years, if the company's EPS per share, if it has grown at 33%, the stock would have either done 32% or 34%. It can't be more than plus minus 2%.
Okay.
So it is, I mean, the mathematics is absolutely set.
So what are the next, the phrase that you've coined for us, buy right, sit tight.
Yes.
The second part of that phrase is easier to do, to sit tight, but how does one really buy right at this point? So, you've had a lot of big wealth creators in your portfolio, whether it's TCS, whether it's HDFC Bank, whether it's Hero MotoCorp. In the next leg of this bull run, where do you think the leaders could emerge from? The wealth creators could emerge from?
Yeah, so the wealth creators are going to be the companies which are doing well and the companies which are going to do well. Now, there will be two sets of wealth creators. One, which are already creating wealth. So, my sense is companies like same TCS, Infosys, your HDFC Bank, HDFC, Hero MotoCorp, Mahindra, I mean, you name it, all across. I mean, these companies, they're the backbone of, say, if you make about 4,50,000 crores kind of profit today. I mean, this bulk of these companies will make about 3,50,000 crores profit. How much profit will make? About 4,50,000 crores profit. Of this, 3,50,000 crores is made by all these big companies. So they're the backbone. So they will grow. Like, we keep trying to figure out new names for the leaders or anything like that. I mean, you have to first see which are the companies which are going to make money. And actually, the new set of companies are very few. And there, of course, one would like to know them. But it comes one by one. In 6 months or 1 year, one company you hit, you make money. And then there must be another 4, 5 which others would have got it. You cannot know all of them.
No, that's, of course, for a very savvy stock picker. But what you are telling viewers is that you know who are the obvious wealth creators. So there is no rocket science over there. Just a word, we just want to update on the markets. At this point in time, doing almost as well as they began. We began with a 0.8% uptick. The gap up opening has more or less been retained by the Sensex and the Nifty. Nifty is up 0.6. So you may say there's a little bit of profit taking, but at this point in time, it is keeping most of its gains. We will wait perhaps for 10 o'clock to know what is the texture of the market's mood today itself, but the mid-cap is not showing signs of flagging. I think the gap up opening was about 1.1 or 1.2. It is now 1% higher, so it has kept most of its gains. We can't resist these trading questions as well, Raamdeo.
Sure.
Though, as you point out, you give only 0.1% or 1% to the market itself, and you're more interested in stocks. But there is a big trading community out there. What is the gut you're feeling about the market's uptrend and downtrend over the next 6 months? Do you think that the uptrend is for the moment capped? We have had enough of good news and therefore a dash to 8,000 in the next few months looks unlikely, whereas a dash to 7,100 is likely? Is that a sense you're getting at all?
See, I'm always wrong in the short term, but with that caveat, I think market will surprise us on the upside.
Okay.
On a 6 month, particularly after the good monsoon and subdued oil prices, and kind of reality, kind of dawning on the people that a great thing cannot be done in a short term. And generally, great things don't happen in short term. So this government is creating the stage for a much bigger bull run and much bigger things to come. But in the short run, whatever was done in last 12 months will kind of have a huge impact. So maybe you'll have a very moderate 6 months, but the markets have a tendency to discount as things are visible far off into the future. So I think in 6 to 8 months time, I would think that a lot of long-term plans of this government and what they can do would be visible very clearly.
That was actually my next question, Raamdeo. How does one really play the domestic consumption uptrend that we're seeing at this point? Do you play it via, the auto space where you're seeing a clear recovery? Do you look at some of the consumer companies, the Daburs, the Maricos, where there is a definite pickup? Or do you look at some of these cement companies where we are seeing recovery on the ground as well?
Yeah. So, for picking up consumer companies, see, good thing is that a lot of consumer companies in India are very dominant, have dominant position in their segments. Say like Asian Paints. Now, Asian Paint has close to 60% market share in the decorative paints. Now, all the banks, all the housing finance companies, and government is saying that Pakka houses by 2020 for all. I mean, I think this is the most outlandish target. And I don't know, I mean, if somebody really gets onto it, even if by 2032 if they are able to do it, I think it is the most staggering target to have, because 225 million households, and I think at least 50% would be kacha houses, if not more, if not two-thirds. I don't know the number. So you're talking about some unimaginable scale in terms of Pakka housing. Now everything has to be painted also, hopefully. So two-thirds of those houses will be painted by Asian Paints. So the kind of opportunity you have, and it's a very well-run company. So your metrics should be very clear. Business has to be very simple. So it is a very business simple that I don't think it is the thing. It cannot be painted by Chinese. It cannot be digitally painted. So we don't have problem about that. So now the issue is that people will be painting with the chemical paints. Okay, so that need is there. How many people are there to compete? There are only, I mean, he himself is there, and rest all are 30%. So he's a price leader, he's a volume leader, he's a kind of a trend leader in every aspect of it. And is the management agile to encash in next 10 years? I think they have the perfect ownership has been separated out. Professional management is in place, and I think they are doing good job.
Yeah, absolutely, putting their head down as a
So
management.
you have to find those consolidated, consumer spaces. They are a little expensive. I mean, I'm not saying that they're cheap, but to make 15-20%, it's not that difficult. But to make 25-30% is far more difficult than what people make out to be.
Fair point. Okay, that brings us actually to the economy question. Raamdeo